it's better than it could be.
Yeah, yeah, no, for sure. I mean, it's like I don't like the direction it's going. That's what
Yeah,
concerns me.
I agree.
Yeah. I'm trying. Oh, maybe it's finally coming live. I'm actually I'm streaming this on YouTube, or at least I'm trying to.
Oh
Um,
man, live,
yeah, but
nice.
I'm not sure that I'm gonna keep track of chats on YouTube, things like that. But I just thought it was a way to get a little bit more exposure, and it'll be available on YouTube. Um, so, see, I'm on an iPad that just shows waiting, even though think I think I'm streaming. Ah, there you go. I had to click one more button. I'm doing stuff I've never done before. This is my first time hosting a Zoom, and I'm also live streaming using OBS. So it's I wonder if I have audio on YouTube because I'm not hearing it coming out of the iPad.
I don't mind hopping over and checking for you.
Yeah, if you don't mind, that would be great.
Is your
Haley.
Oh, there it is. I just heard somebody else say Haley. Is there another?
This is Suraj,
Oh, Siraj. Hey,
and I can hear you on YouTube. It's a
awesome.
little delayed compared to the Zoom call, but it's there.
Yeah. Okay. Awesome. That's great. Then I can't believe the audio visual stuff is up and running right on time. Okay. So let's see. I guess we'll just start. It's going to be recorded anyway. I don't want to keep this too long. I mean, we'll do this as long as you guys have stuff you want to talk about. So I'm not, but I just didn't want to belabor it. So I just wanted to start by acknowledging it is Memorial Day, and I looked for an image that I could use, and the funny thing is, before I even found this image, I knew this was the perfect image because it said honor. And to me, honor is one of the scarcest values in the world today. And I think it's very sad. I think honor is so important. The other one is discipline. Honor and discipline are what make this country great. I think it's what makes humanity great. And it also, in a way, honor and discipline are very related to trading. And, it's like, I don't mean to diminish the importance by immediately tying it there. But, if you honor your rules and if you trade with discipline, you'll be as prosperous as this country. So I just wanted to at least say something about Memorial Day, and I hope that nobody finds it offensive that I scheduled this for Memorial Day. It was a rare opportunity to meet during the day instead of after the market closes. So, but we're gonna start doing these regularly. So unless anybody has anything they want to say, I'm ready to jump in.
No, good time, and thank you for acknowledging it, and I appreciate the compliment.
Thank you. Thanks. It's great to have you here, Dre. And you, Siraj. I don't know, is there anybody else? I guess it's the three of us at the moment. Let me see if I can move this out of the way. Yeah, okay, great. All right. So I want to start with one thing in the data analysis, but then the floor is open. We can talk about anything you want to. I you should be aware now that there is the data mining course that's available for free at tradeunafraid.com. You sign up for the training, and there's now two courses. There's the one about trading with Trade Unafraid, and there's a data mining course. And in that data mining course, you will get this the Jupyter notebook that you're looking at on my screen, along with the instructions for how to export your data and how to run this whole thing. I'm working right now with about a year and a half of data. There's over 168,000 trades, and it's very slow. I mean, actually, it's way better than it used to be. Siraj, you know that the first time that I did some of the crunching that I'm doing now, it was taking hours. And I've gotten most of it down to like 5 to 10 minutes. But and this probably needs to be worked on too. It could probably be made faster. But this is working right now. And what I'm working on right now is trying to see how predictive the early trades of the day are for the results for the throughout the whole day. So, if you know that, then you can maybe take 5 trades or, the first 15 minutes of trades and then cut it off if it's not looking good. And so you can see that this is still crunching. There's a lot more data to go. Oh, and in fact, I'm sorry to interrupt myself. I realized that I captured a screenshot that maybe I can show you the full result, even though it's still working its way through it. So give me just a sec. So what you're looking at while I'm hunting for the right image is you can see down here that what it's doing is saying, okay, if I look at things based on time, if I compare the first 5 minutes of the day to the total result of the day, what's the correlation? And correlation goes from -1 to 1. So negative correlation means that the first part of the day was the opposite of the end result of the day. So negative correlation, it could still be useful. If you find that it's -1, that means you can definitely bet against it. A positive correlation means that there is some value, predictive value, and as you can see, the longer you give it for that early part, the better the correlation gets. We've doubled correlation going from 935 to 950. So there is some value here. I need to do some more scrutinizing of these numbers because, for example, if you had a trade plan that ran one time and it was at 9:30, then the correlation would be 1 because the early phase would completely match the full day. So the correlation there would be misleading. So I have to dig a little bit deeper to see if these correlations are not doing that kind of thing where the bulk of the trades were in that early phase. So there's not much to predict after that. But in general, I am seeing some promising results. And let me see if I can find that screenshot. My computer is so bogged down right now running Colab and of course I have 100 tabs open as well as Zoom and OBS. But so everything I do is slow.
Okay, Lee.
Yeah.
I just had one question.
Yeah.
To make sure it's still on line with what you're referring to. Is this crunching the 168,000 trades that you have taken in the past, or is this just a strategy that you're testing out live?
This is looking through the 168,000 and looking for some trends in those results.
Okay, and the methodology is taking the first 5 minutes and finding out if the subsequent, ending result of the day matched.
Right.
Okay. So matched what of the first 5 minutes?
Well, basically, I have to dig a little bit deeper into exactly what it's doing, but it's looking to see and you know what? I'll confess something here. I actually asked ChatGPT to write this. So that's why I'm not intimate with the implementation. It was, ChatGPT can be great at some things and just a horrible time suck at others. So, but it did a good job here. So what it's doing is it's looking at the early definition, and then it's comparing. So it has, like for the time cutoff, it figures out which trades fit in that group, and then the part that I'm not sure about is when it compares. Is it comparing the full day or just the day that's not in the early group? And I have to figure out total P&L. Let's see. Okay. Yeah, so I believe that what it's doing is it's comparing the full day to the early day. So the early part of the day would be included in the full day. So, it's saying, all right, in the first 10 minutes, this is the result. In the full day, this is the result. How closely correlated was that? And it's using a correlation function. So I'd have to look into exactly how that takes two numbers and decides how correlated they are. I'm not really sure what it does, given that, it's like if you give it 1 and 10, how correlated are they? I don't really know what it would use to decide that. So a little more research is needed. But this is currently computing, and you can see as time increases, the correlation increases. So there's something meaningful about that. Actually, I bet what it does is it does something like average the two numbers and then see how far each of them is. Well, actually, that wouldn't make any sense, because if you average two numbers, then the average is going to be right in the midpoint. So I don't know. Anyway, this is the end result of the whole thing once it's run. This takes a long time, so I captured a screenshot of it. You can see here, like 10 trades, the correlation is 0.99. That's what I was talking about earlier, that if you look at 10 trades, then you must be looking at a large chunk of that day's trades, so the correlation is virtually 1. So you got to kind of dismiss these 0.9s. They're probably too idealistic. But I think when you get into the 0.6s and 0.7s, you're actually looking at something that has some merit to it. So anyway, this is a work in progress. This data analysis I'm in love with. I am finding that it is so valuable, and there's so much data to mine that I'm finding all kinds of things. And that's the next thing I want to show you guys is, let me get rid of this. Did I get rid of that too soon? Were you guys looking, or you have any questions or anything? I can bring it back.
I didn't have any questions.
Okay. All right. So actually, I'll just jump here. This is, to me, the most exciting thing I've seen in a while. This is the and Siraj, you've played with this a bit, and you found some value in it too. And I've improved it since you ran it. So I need to upload this version, and you'll be able to download the new version and try again. But this is, of the 168,000 trades, I can't point at it without it moving, but you see there's the block, and it says entry, incoming flow count, outgoing flow count, and then in white there it says 166K. So this is almost all but 2,000 of the trades that I've run over the last year and a half. It's very possible the other 2,000 were manual. Oh, in fact, I know that some of them were manual trades because somewhere up here is a manual entry. No, that's a manual exit. I'm trying to figure out how to make this thing more readable. I've definitely improved it, but it's still, I mean, it has these loops that are just so annoying. But anyway, let me not sidetrack myself. Here's the great thing I found. Of the 166,000 entries, you can see 33.6 thousand went to Ratchet Bracket 1, so they hit their first target. Almost 7,000 hit their candle trail exit, so they got stopped out. And this is the first stop. So there's the entry, and then where does it go from there? Almost 1,000 green to red candle, which means basically that price reversed against it and it went the other way. 52,000 went to grab sense 1. So and we'll follow this path a little bit further. But here's the thing that I found that was like such a mind blower to me. 64,000 of 166,000 went to the ATR trail. So I immediately can see now. See, this is a very winning strategy overall, but with some horrible losers. And I can go back and show you. I've shown this in other places, but I've been puzzled by why are there such successful trades and so horrible other trades. And so this is the answer right here is my ATR trail is clearly not tuned for certain, and I think it's symbols. I think that like SPY and the Qs do quite nicely with this strategy. IWM is almost always a loser, although it has its winning days, and that's why I've kept it around, is that there are some days IWM is the winner and nothing else works. But I'm pretty sure, and I need to drill down further on this, but the fact that such a huge percentage of my entries end up at this ATR trail, I think, is the answer to why I'm not more consistently profitable on so many more symbols. So,
Lee,
yeah.
quick question. If you would, can you, I know you talked about this is the outside candle trail,
Right.
outside candle strategy that you just wanted to get. Okay, can you walk through that even if it's on a chart? I've never seen this strategy, and I'm trying to wrap my head around even what the entry, exit, and management is.
The are you talking about you want to see the trade plan overall, or are you saying you don't understand the outside candle entry?
Correct. I've never seen the strategy set up, the execution of it, what it even looks like, the definition of the trade plan, I guess.
Okay. Yeah, this is something I should have done before this started. I probably have to log in. Yeah. All right. Hang on one second. I didn't even want that to show. Oh well.
You can go back and take it out through editing.
Yeah, that's true. But it's live, so yeah. It's okay. I've got security galore, so I'm not really that worried. Okay, so this is the trade plan that I run almost every day. It does really nicely on SPY and the Qs. So here's the basics of the trade plan. First of all, I trade the ITM 1, so the first strike in the money, and I just use the front two expirations as the default, and the setup here is it's just looking for an outside candle on the 1 minute chart. So anytime there's an outside candle, and I should point out this is either long or short. So anytime there's an outside candle that is engulfing either bearishly or bullishly the prior 1 minute candle, then that's an entry. So we're basically looking for it to continue in the direction that it's going. So, if you have a candle and then price breaks the low of that candle and then in the same minute breaks the high of that candle, we're going to say that's going to keep going higher. And that's the premise. And then this is the exits. So it's a $5,000 entry. So whatever that buys based on whatever the price of the symbol is. There's a 10% loss limit, and you saw loss limit wasn't even a significant chunk of the from the entry. There's very few that went to loss limit directly. ATR trail is clearly my big problem. It's too tight in at least some cases. So that's something I have to drill down on is, why is this snatching, about a quarter of the entries and, locking in a loss rather than giving it some time. Then there's let's jump down to ratchet bracket. So it takes 10 cents on 10% of the position, and it'll keep doing that. So it'll take 10 cents, then 20 cents, then 30 cents. And a mistake I made here, but I've stuck with it because I have so much data on it, is I left no trail. So, I really believe, and I made this trade plan quite a long time ago. I really believe in, as we've talked about, taking something off the table, getting your position risk-free, and then seeing how much the market will give you. So this does a pretty good job of that because it's only taking 10% off every 10 cents. So, you'll catch a decent runner. But if you get one that's just, one of those blowout moves, it'll miss it because it'll be flat before, so there's no opportunity. I really think it's a big mistake. So I would not recommend using this kind of setup. All you have to do is put in, 10% trail or 20% trail, and you would then have something that can get those outlier kind of gains.
With this setup, Lee, could you theoretically be in a call and a put at the same time?
Not. That's one of the things that Trade Unafraid doesn't do yet. That it's absolutely on the roadmap. As soon as I can hire some people or find the time myself, is multi-leg positions. So right now you can be in shares long or short. You can be in a call. You can be in a put. And by the way, you could do those long or short also. That is an option, but only one leg. So no, you couldn't do a straddle or a strangle or anything like that. I really want that, but no, not yet.
So if were met that you were in a call and that trade played out, you say took 10% on a take profit of 10 cents.
Right.
And then I guess I'm thinking what would be the exit that would close that trade if a reversing engulfing candle triggered a short in order for you to the opposite way? Would that just would the second engulfing nullify the first trade, close it out, and enter into the second one?
Well, yeah, that's a great question. I actually thought about this on Friday. See, right now the way Trade Unafraid works is you have your active trade plans back here in this area, and if a trade is open, that trade plan is occupied, so it won't take a new entry. So the only way that you would be able to, in that same trade plan, go from long to short is if it flattens in between. So if say the ATR trail or whatever, the MFE retracement, this is maximum favorable excursion, by the way. So whatever stop were to get it out, and flatten the position, it will then immediately start looking for the next entry, but it would have to be flat for it to take that short that you're talking about. So it wouldn't reverse. It wouldn't go from long and then say, "Oh, I just saw a bullish engulfing, or I'm sorry, a bearish engulfing candle. So now I'm going to reverse the position." That's not a tactic, at least not today. We could, I would be open to adding that, but you can't do that today.
No, I wasn't suggesting it. I was just making sure I understood how
Right.
it actually processed through.
Right. So basically, what's happening is it's waiting for a setup, and then once it's in the setup, or once the setup triggers and it's in the position, it's only monitoring the exit tactics. And then once it's flat, it goes back to looking for the setup. You get that? And
Yeah, so
and all of that is only because repeating is checked. Because if it's not a repeating trade plan, once it's flat, it closes. And I mean, it's done.
how many trades have you seen happen throughout an entire day?
My typically what I see in using these, I'm running usually 30 trade plans. Sometimes, like lately, I've been running 40. I will see about 6. I hear an echo. Is that me or is somebody else talking? I guess that was me. Kind of sounded like me. I will see about 600 to 700 trades in a day. Is typically. We could actually do the math if we wanted to, but 168,000 over. I've been doing this since the first trading day of January 2023. So yeah, it's somewhere in that range of 600. So did this show you what you wanted to see?
Yes, and that was on SPY or another.
Well, no. What I do every morning is like I was telling you on Friday. This is tedious, but I will create the trade plan. Then I'll come over here and if you double click it, you don't have to. So then I'll do create QQQ. Then I'll create IWM, and I do that. I've been doing this now for I think I'm up to 12 symbols. So I do it for the 4 indices, so the diamonds. I do it for TLT, and I do it for the Magnificent Seven. By the way, the Magnificent Seven are horrible with this trade plan. So I believe that every stock has it's almost like a resonant frequency. It has to do with the ATR, the average true range, and the volatility, every stock is its own market. And so I think for some stocks you've got to tune these trade plans to match them. And that's one of the reasons why I think one of the first things we're going to add when we have more developers is a percent ATR as a way to measure stocks, so that you basically can reuse the same tactics for any chart, because you would have the ability to kind of tune it to that chart's candle size, rather than having to do things in cents or percentages. I think the percent of ATR would be the most universal way to talk about a chart.
So you don't use any other outside factors, EMAs, SMAs, trends, higher time frames, anything?
Well, those are available. You can definitely do them, but no. Like I've said, my goal here was to gather lots and lots of trades so that I could gather trading data and then analyze it. So that's basically what I've accomplished is 168,000 trades, growing by 600 every day, and now I've got this data mining that allows me to scrutinize how each trade played out. So my setups are really stupid. Just entering on an outside candle doesn't give you a lot of edge. I think if you include other things, you probably and actually I'll go to the expectancy table and you'll see what I'm talking about. One thing you could consider is full time frame continuity, which is a way to see is the setup going in the same direction as a higher time frame. So this would say, and actually I don't even have to do this. I can load a different. See, this one is filter 15. So this is another one that I run every day. And this one includes a time frame continuity of 15 minutes. So if it gets a long trigger, it won't enter unless the 15-minute candle is green. So it'll basically skip that trade, which would leave it open for then entering short if if you got a reversal like that. So we can actually compare the performance of those two trade plans, the follow and the follow with the filter. And one of the things I really recommend is create trade plans, don't change them, add a version number and create a copy of it and change that one with a new version so that you can compare them and learn what's working and what isn't. That's really been the key to success for me with this whole algo trading approach.
Okay, so I guess you just answered another question I had. Thank you, but I guess now then is with those trades that you have captured, the 166,000 trades, are you now able to go back and analyze kind of a what if scenario with those trades to find out, hey, can I pull out the sweet spot or what was better in under certain circumstances?
Yeah, for sure. And there's a lot to this, so I'm going to show you I'm going to answer your question in charts above that are already doing what I'm going to talk about. So here, the ATR trail, this insight is not as insightful as I would like it to be right now because it includes all symbols and all trade plans. So what I really need to do is generate a diagram like this one by symbol and by trade plan. And I'll show you, I'll go up above and I'll show you how I've done that. But actually, this is not what I wanted to show. I wanted to show, before we leave this chart, I just wanted to show that this gives you an idea of how many targets are getting hit. So, and again, the weirdness about the way things loop. I'm not sure what to say, but so here you can see down below, I can't point or it'll move, but grab sense 1 goes to grab sense 2 33.6 thousand times. That's out of 52.6 thousand times that it came to grab sense 1. And so we could follow that. So let's see, here's grab sense 2. And it hits grab sense sorry, it's just I'm trying to figure out how to make this render in a more usable way. I can't figure out. There's something about the overlaps, but I can't get it to show me how many go to grab sense 3. There it is. Okay, so this is actually really good that it of the 34,000 that hit grab sense 2. Come back. Almost 25,000 hit grab sense 3. So that what this is showing is that this setup actually does okay. That there are times where you get that follow through that you want, and so we can go from grab sense 3 to grab sense 4 It's all still up at 19,000. So, I mean, it's pretty promising to see that you're hitting multiple targets. The same thing happens with ratchet brackets. So there's 17.6 thousand that hit ratchet bracket 2, and it's like you got to manually reorganize the whole thing. No. Okay, so that's ratchet bracket 2 hitting the ATR trail. There you go. Okay, ratchet bracket 3, 10,000. So we're definitely seeing some follow through. We're seeing multiple targets get hit. So anyway, as I said, this is 168,000 trades on this diagram. So let's go up here. And let me see. Is this the best place to show this? Well, we'll start here, and then we'll we can look at some other things. But this is a risk-adjusted expectancy calculation, and this one is based on. It's based on. Oh, hang on. Sorry, I think I have to stop this from computing in order to be able to interact. Yeah, I'm gonna have to kill this, but you've seen the final results anyway. Okay, all right, that stopped. So, by the way, I know I'm all over the place, but this is a graph depicting the correlation of the early P&L, which is down here on the x-axis, versus the total P&L on the y-axis. So if you think about it, you would want to see things in the first quadrant and the third quadrant. So the early P&L being positive would correlate to positive full day, and then negative P&L early would correlate to a full day of losers. And that's what we see, which is really encouraging, because that means you don't get a lot of days where it starts out looking good, but then you end up, as a big loser, or it starts out looking terrible and you miss out on big gains. So I think there is some validity, and I just wanted to point that out with the graph. So anyway, back here, now this should render properly and allow me to sort it. Here, I'll just shift this over. Okay. All right. So this is expectancy, and we'll talk about the formula for expectancy because there's two important things that go into it. I was afraid of that. My computer, the fan is chugging like crazy, and it's taken a long time to process a mouse click. So I sorted that one time too many. So this table is sorted by both symbol and trade plan. So the trade plan that I showed you before, okay, so now we're looking at max expectancy down to min expectancy. One thing I want to point out in this table is that the number of trades is important because you want to have a decent sample size to know that your statistics have validity. So this is trading SPY using this trade plan, but there's only 10 trades. So, that a crazy expectancy like that is something that we should not put a lot of stock in. We should, keep looking for things that have higher numbers. Actually, none of these are impressing me because I have thousands of trades. So let's go to page 2. All right, so anyway, here's the thing that I wanted to bring up in this table is the two important numbers are win rate and win-loss ratio. Those are what go into the calculation of expectancy. And you'll see that my win rates are mostly below 50-50. These are percents. So this is, winning 37% of the time. Here's some 40s. Here's a 54. That's actually pretty good. But where these are winners, and this is why I believe so strongly in Trade Unafraid and trade plans, it's because of the win-loss ratio. If your average winners is significantly bigger than your average losers, that's how you end up with positive expectancy, even if your win rate's not impressive. So that's real. And see here, this one win rate that's over 50%. It's not, the expectancy is not impressive because the win-loss ratio is actually right at 1. So if you can find a way using trade plans to make your winners bigger than your losers, you're golden. And then you can work on your win rate. You can find better setups or better ways to validate those setups, like you said. Filter them based on EMAs or other time frames, but making sure that your trade plan cuts your losers short and lets your winners run is really the key to success. So,
so from I guess, and I may be asking the same question a different way, but of the 168, say, thousand trades that have been placed, just the first take profit for the first target, which is that 10%, right?
yeah. Well, it's not 10%, it's 10 cents. And selling 10% of the position, yeah.
10 cents, and then what was the second?
It's taking 10% of the position. So
10 cents.
yeah. So
and it's different for different tickers.
right. So it's trading a $5,000 position, and so it's basically selling whatever 500 is. Now the way Trade Unafraid does that is if you have any percentage in there, it'll sell at least one. So if you have, let's say you're trading SPY shares, and you've bought, let's just say you bought 10 shares. If you say 10%, actually, how do I say this? The point I'm trying to get at is, even if that 10% is less than one share, it'll still take a profit, a partial profit. Yeah. So the goal is, if you hit a target, you got to take something off, even if that percentage is not up to the size of the price. So the thing to keep in mind there is, if you're only trading a one lot, your first target's going to come off, period, even if it's 100% of your position.
Okay. You did mention that the different tickers kind of reacted to this trade strategy differently. So is there a way to isolate them independently of each other so that you can see?
Yes.
So let's say we dealt with SPY. I don't know how many and it looks like you had different versions of the trade.
Oh, I've done a lot of experimenting, so I have a lot of different trade plans. Yeah. So this is one way to look at it, and this is going to be an R&D project forever. I expect that there's so much data, so many ways to slice and dice it, that this thing on the left, the menu, is going to keep growing, because we're going to find new ways to visualize the data and analyze it. That swirly Sankey diagram that I was showing you, that's brand new. I created that in the last week or so. And I think it's one of the most enlightening diagrams I've created. So, we're just going to keep getting better at this. But this one is a heat map that shows, by symbol and by trade plan, where are the gains. So this is profits, but I think this is normalized. Actually, let me go to this one, although neither one of these, well, I'm sorry. This one's right. The normalized one needs some work. The reason normalized is useful is because see, these I've traded a ton of, so they're going to have the extremes just because the dollars are so much greater than these things out here. But if you find something useful but you've only traded it for a few days, it's going to look like it's near zero just because it hasn't had time to accumulate. That's why normalized is actually worthwhile. But I think there's something not quite right in the normalization at the moment. But you can see here that the SPY does very well on the ones that I've traded consistently. Qs do fairly well, and the IWM just sucks. It's like, but it has winning days, and so there are other ways that we can look at that and see how it does. In fact, here if we go to, before I leave here, do you have any questions about this? No.
No.
Okay. All right. So if we look at candlesticks of trade results, this gives you some idea of how different trade plans and symbols perform over time. So these in these charts, each candle is a day, and so we're charting P&L, profit and loss. So just like any other candle, what you see is an open, high, low, and close. And what's so great about these charts is they confirm what the other analysis was showing, which is that we typically start near zero and then trend either up or down. So you can see that a lot of these are, I think they're called Marabuzo or so. So I forget the name of the candle, but they basically have no wicks. I mean, there's some wicks. There's a wick here, and there's a bigger wick than I want to see here, and here's the terrible kind of wick that you don't want to see. But for the most part, you get the follow through that the P&L at the end of the day continued the way the day started, and you can see that this is the cumulative P&L, and so this allows you to see over time. So here we'll scroll up and find IWM so you can see why it is so bad. But I don't believe that IWM is so bad. I believe that the trade plan I'm using on IWM is not tuned to it. So you can see, look at all that red. Let me go to the one.
If you switch the direction, would they then turn green?
You mean like if I took a bullish engulfing candle and shorted it?
Correct.
Theoretically, so yeah. Although my belief is
on that ticker.
Yeah, right. No, I understand what you're saying. It's like use IWM as a trade it. What's the word? Contrarian. Yeah. I don't know if that's the right approach, though. I think it probably just needs to be tuned. It probably just needs. So one of the things I would do is I would go back to that Sankey diagram, the loopy one, and I would, instead of doing all 168,000, I would isolate it to just IWM and see. Actually, unless you want to do something else, we could do that right now. Do you? I mean, Siraj, you've been quiet. I know that you have questions.
No, that would be cool because I think that's kind of the challenge with that diagram. There's so much data.
Yeah.
And if we can filter it out and just look at one single trade plan,
okay,
a lot less data will be easier to see.
Right. Okay. This is a work in progress. It's not at all right now. And there's another one down below that. Oh, this one didn't render. But yeah, I'm actually working on one that's not going to be for trades, but it's going to be for trade plan configuration. So because I'd like to see, based on like if you have a 1 minute candle trail versus a 2 minute candle trail, how do those play out? So that's going to be the next little project I work on. All right, so I'm going to Oh, oh man, I forgot about that. Okay, see, this doesn't take the full data frame as its input. It takes this sand key collection that was created up above. Yeah, right here. So I don't know how long this will take, but if you want to see it, this is what we can focus on the rest of the time. Um, I'm happy to do whatever works for you guys. So
I guess if anything, I'd like to see. I know you say that it's a combination of I think 11 different tickers, the indices, the seven,
yeah,
6, 7. Um, if you had a way to isolate, I trade SPY and SPX,
right.
and so it'd be maybe interesting to see those two. If you trade it, if you have SPY, isolate the data for the last year, maybe plus how many trades were taken on SPY, and then if you were able to on just the chart itself show what a entry based on the strategy would look like on SPY, so I can wrap my head around every time you would get an entry, and then what would I think I get what the exit is: 10 cents, 10%, 20 cents, an additional 10%. I just I don't know if I'm fully up to speed on what the criteria for entry is: a break of the wick or the body above or below engulfing. So, and this is the first time I've ever seen any of these
Okay.
uh, strategies. So, just bear with me, please.
Okay. Yeah. So, Siraj, I will. I'll do what we talked about rather than coding in front of everybody. I'll do the Sankey diagrams per symbol or per trade plan. Okay.
Yeah.
And I'll either I don't know. I'll send an email. I'll do a video, something. But we'll get to that. But it is going to be a little bit of a project.
We can do, Lee. I mean, then maybe that'll help because
Yeah.
we can slice and dice our own data.
Right, definitely. Yeah, in fact, I'm thinking that sand key collection I'm generating, maybe that needs to be a data frame also. And then we'll be able to do that diagram on demand for any diagram, I mean, any symbol or any trade plan. So, all right. So anyway, this is by, see, this is P&L by symbol, and I had all of them here. And so you can hover over them and it'll tell you. So this is the Qs, this is SPY, this is IWM. So that's the short answer to your question. These are the Magnificent Seven, which I started doing more recent. Oh, I'm sorry. I just realized something. This is by time of day. See, you got to pay attention to the x-axis here. So this is basically showing how they perform based on the time of entry. So you can see that like the Qs are pretty strong until 11 o'clock, and then they start falling off. SPY seems to actually improve or keep going as the day goes on. But I think I have P&L by date here. Yeah, okay. Here we go. So this is P&L by symbol over time. And you can see that, I've been using this server for things prior to January 2023. This is our test server. I deploy new code to this server before it gets in production, that kind of thing. But I also use it. It does double duty. I use it for all of this data gathering. So this is how SPY has performed since January 2023. And you can see that it's the big, the best performer. It's up over 370,000 in a year and a half. That's all trade plans combined. The Qs are up 24,000 in that time, and IWM has lost over 500,000. So again, I don't blame IWM. I blame the trade plan. It's not doing the right thing. And I think the Magnificent Seven also proves out my point here, because you can see that they're just consistent losers as well. And I honestly believe that tuning the trade plan. See, here's the thing: is is it smarter to work on your weaknesses, or is it smarter to focus on your strengths? So, do I really care about getting profitable on meta, or should I just keep working on spy and the Qs, which are working? So I don't know. I kind of lean towards go with what's working and see if you can improve that, rather than fixing these broken things to try and figure out what it takes to make them work. But anyway, that's a decision left to each trader. But I did want to show that there's something about this same bullish or bearish engulfing setup that works very nicely on SPY and the Qs and just doesn't seem to work elsewhere. So did this answer your question, Dre? I know you had other questions about trade plans, but as far as seeing how the SPY performed over time?
So this breaks it out. SPY and the Qs and IWM is the clear, inversion.
Yeah. Now here we have the same thing over time by just trade plan, and then I think, maybe I don't have that one. Yeah, I thought I had by trade plan and symbol, where you would have a line for each. I need to add that, because SPY has done well overall, but there are many different trade plans I've traded with it, and some do better than others. So we would definitely want to plot that as well. So I'll add that. Let me make a note of a couple of things.
Hey Lee,
Yeah.
in these graphs that are interactive, is there any way to filter out by dates?
You mean like taking? You're talking about like filtering here?
Yeah, like this graph here. Instead of looking at just Jan, the whole year, can we just say selectively 1 week when we maybe make changes to our trade plans?
Well, these will let you zoom. I don't know if that actually accomplished. Oh, I didn't realize it was gonna be so finicky about the borders. But that's time of day. How did I end up there? You can zoom on these, but yeah, I guess I think over time what's going to happen is we're going to make this more like a dashboard and less like a programming environment. So you would be able to just tell it like starting this date, ending this date, plot the same thing. I do have some things that let you put in dates, like I know, what I'm saying is I know how to create controls that let you do this kind of thing. I just haven't added that in all cases. So
yeah, no, that's good. I think one of the things was, for example, you mentioned, if you have a trade plan and you're seeing X results, create another version of it and make your tweaks and then see how that does.
Right.
And if there's a way to just plot just those two things, right? Okay, my original plan and my tweaked plan, and then since my tweaked plan only started from, say, last week, I really only need to look at 1 week of data comparing the original versus the tweak.
Right.
So yeah, if there's some way to get that, or I can't think of any other way unless the query limits what you see. Um, that way we can kind of look at it, just kind of diminish all the data and
Yeah.
just focus on what tweak plan made, and was that really effective or not.
Right. Right. Okay. I'm making notes of these things. They're definitely on the roadmap already, but I'll give them a higher priority. But so anyway, I was just showing that you can select things. This is all the trades for Friday. So and you can see it was a really bad day. Actually, this is one of those days where it was positive, and then I think it ended up very negative. Yeah. Oh, yeah. So around.
What are the titles of those columns, I'm sorry?
Well, this is just an ID. This is the time, date and time, symbol, trade plan. This is the P&L of that trade, and this is the running total for the whole day. So basically, this is this plus that. So each trade contributes to the running total. And it started out very promising, but see, this is what I hate: is a day that looks good and then it ends up down $9,000. So that's why I like.
You built it at,
What's that?
you built it at to one ticker?
Yes, yeah. There's controls at the top that let you filter by symbol. See, this is all symbols and all trade plans on that date. But so I could do SPY, and I can.
And it looks like you had 8 different versions of the trade plan.
This doesn't seem right. Oh, it went back to this date. Is it thinking, or did something go wrong here? There you go. Yeah, so Spy did well overall.
Okay, so I'm just putting this down. So this was on Friday.
Right.
And what version of the trade plan is this?
Well, this is all trade plans. See, these are the trade plans here. So we could isolate it to a particular trade plan.
Okay, I guess, and that's where I'm getting confused, because I thought we were dealing with the outside candle trade plan, and
Well, no, I run multiple things. So
okay,
and I run them in parallel. So this is that one trade plan on Friday on SPY. If I want to see how the filtered one did in comparison, boy, this date, it goes to the earliest date every time. So that's something to be aware of if you're playing with this. Oh, there they are. Yeah, so see, in this case, filtering looks like it helped, because this was down and this one ended up. So, and you can see there's fewer trades.
what are those two?
This is both of these are Friday on the SPYs. This is the outside candle with a 15-minute filter, so it has to be in the direction of the 15-minute candle. So you can see that.
Okay, so it has to be the same color of the 15-minute candle.
Right.
That's just a trend, and then this one is just brute.
Yeah, without filtering, the same thing.
Without filter over. Engulfing candle.
Right. Right.
Okay, there were less trades and it ended red.
Right. Actually, no. There were less trades down here. Only a few, though. I mean, it's pretty close. I mean, this looks
Okay,
like.
so this one was less. This one looks like it was less trades, and it ended green by. Is that $1,300?
Yes. Yeah.
Okay, so the one above it with this one ended red.
Yeah. It was actually up most of the day, but
Okay,
yeah.
so all right, so and this is where I'm looking at. If if I could see a year's worth of information for this specific ticker to understand, like I said, my first time walking into all of this is what I'd love to see. And at some point, you were up a significant amount.
Yeah.
You know beyond, and that was at 12. I don't know if that's Eastern or Central.
These are
At
everything
12,
is. By the way, everything is Eastern on
copy.
everybody's server because the server is located in the Eastern time zone.
Okay, and I think before in this you mentioned, and I think a lot of people would agree, after 12, 11 Central, you start your confidence behind trades and volume starts dropping off. So would you even trade beyond that point? You might have a cutoff.
Right. Yeah. Let me. I'll just show you this. Actually, not that. This is cumulative P&L for
Correct. Okay.
every trade. So this includes the horrible, magnificent seven, everything. But this is by time of day. So
Okay.
the cumulative P&L climbs to 168,000 around 11 o'clock. It just turns and goes the other direction.
Correct. All
So
right.
yeah.
So of those two outside strategies, one with and without the what do you call it? 15-minute.
Filter, yeah.
Okay, so one with and without the filter by 12 o'clock, how many days over the past year have you been able to get to this result by 12 o'clock? Is that something you can pull out and just have a percentage number of, hey, out of, I don't know how many trades are SPY out of the 168,000, let's say it was maybe 12 or 15,000. Out of the 15,000 trades on SPY, X number of percent resulted in this by this time.
Yeah, the data is definitely here, but I don't know that I've actually exposed it quite that way. That's one of the things that, I've played a little bit with ChatGPT as a way to, rather than knowing how to interrogate a data frame in Python, you might be able to just give the data frame to ChatGPT and say, ask your question the way you just did, and see what it tells you. So what I'm missing here is the plot that shows symbol and trade plan over calendar days, and that would answer your question. So you'd be able to select on SPY with this trade plan, double click it, and you'd be able to see that line and how it performed over time.
Mm-hmm.
So that would actually not be that hard to add if you want to give me a moment to try and do that. You had other questions about the trade plans. Do you want to get into that?
Yeah, I mean, if you have time and you're okay with it, I
Yeah.
just on a, do you trade on TradingView or do you trade on your system?
I trade on Unafraid. I mean, I have experimented with the webhooks. In fact, one of the trade plans that you'll see in here is let me see if I can find it this way. It's a TradingView webhook. I can't tell. Yeah, so it appears in here. I have the search is just not. It's not taking us to where this stuff appears, but I do have a trade plan that triggered a whole bunch of times based on TradingView webhooks. But I don't actually do that day to day. But
If I may ask,
yeah, go ahead.
Sir, if I may ask Siraj, is that it? Is that say pronounced correctly?
Yeah.
All right. Are you a coder yourself? Or a programmer?
No, I'm not, unfortunately. I do have TradingView. I did ask the same question to Lee as well about using webhooks because if you are just more heavily into using, either indicators from TradingView, it's probably there's a lot of free source code out there. Then you can sort of make something together and then send that to Trade Unafraid to manage it for you, and that's really kind of the part two of this, right? I mean, to me, I'm doing a lot of the work right now in TradingView. I'm sorry, in Trade Unafraid. Just kind of keeping TradingView on the side because initially I was trying to get familiar with this. The honest goodness answer was I tried this a while back and I didn't get off. I used it for a few months and then I stopped. But I realized that this is really the way I think ultimately when you can automate it, take the risk out of your hands and just let the plan enter and exit and do it on a regular basis consistently without emotions. That was the end game. So initially when I signed back up, I've been using just the trade plans and it seems to be doing fine, meaning obviously like kind of what I was telling Lee is the days where you see good trends and Trade Unafraid is just doing massively well. And then there are days obviously when you have chop. And the question then is, how do you address that, right? I mean, do you without dealing with Trade Unafraid, I'm sure most of us have some inkling on when there's chop, especially after large range days, you tend to have chop. Chop days are probably about 60-70% of days. So how do we manage those days? The same trade plans that work for trend days probably are not going to do well. At least that's what I've seen on chop days because it just keeps trying and trying and trying and trying, and it'll keep stopping out. So kind of one of the questions I think way back earlier when we started was looking for consistency or early signals that something is going wrong. What I've noticed myself, because I'm trading with options, is that when you start seeing the number of contracts going up and your P&L isn't, it's probably going to be a rotten day. Just stop, stop on your plans or pause your plans early and just leave it, right? Because
I'm sorry to interrupt.
Yeah.
What do you mean by the number of options going up? You mean they're cheaper?
Traded.
Yeah.
On a contract traded.
Okay.
Traded.
Okay.
Yeah.
Okay.
So like for me, I'm a bit like Lee, just collecting a lot of data, and what I've seen is kind of if you collect the data every day, you'll see like okay, I'm doing let's just say 2,000 contracts every day, right? Let's use that as a number for now. On days when it's trending, it'll be a lower number because you get into the plan keeps acting and working for you, and it doesn't stop out easily. So on trending days, let's say you're doing about 1,200 contracts, and on days when you have chop, you will see 3,000, 4,000. So to me, I mean, right now there's no easy way other than to download the logs to kind of see the contracts traded in total. At least I have not figured out another way. Maybe Lee knows. But to me, that's one way. Live when you're on a live day versus waiting to end of day. As the day trades, let's say half an hour, 1 hour into the day, and you see that usually by this time, X amount of contracts would have triggered, and you can see you're running P&L. And if that's not happening, guess what? It's probably not going to happen for the rest of the day. And I'm just basing that purely on a limited subset of data going back 3-4 months. But I've seen that quite consistently, right? That when trades are working in favor, you actually trade less contracts, not more contracts, because you're in the contracts for longer.
Yeah. Yeah. One of the thoughts that I have in this area is you can make trade plans tuned for chop days and other trade plans tuned for trend days. And I think one of the most powerful things about Trade Unafraid that is so easy to overlook is that you can pause things. So you could set up both chop and trend trade plans and pause all of them if you want. And, you can pause everything with one click here. And then unpause the ones that seem like they're, better suited for that day's trading. So that's one thought I had about that.
I think the magic is somehow the system being able to make that decision for you. Eventually, over time, and maybe working to get to that point.
Right.
I mean, I consider myself. I mean, I've only been doing this for 3 years. I still consider myself a fairly novice, but I've experienced a lot, but still consider myself maybe a fairly novice trader. I just and I may be naive, but I just imagine with at least a decade of data information that's available to sift through and analyze and whatever, there must be some signature or repeatable, identifiable pattern to be able to say, hey, the likelihood of a chop day is present, and then you say, hey, no, we're not going to trade today.
Mm-hmm.
And conversely, hey, we're in a trending market, or today could possibly be a trend day based on historical data. I mean, obviously nothing's guaranteed. It could be wrong, but if there's a factor that tells you that, that's an easy kill to say, hey, we'll take it like this day because of X, Y, and Z. That was, we were advised, and on other days, just let the trade attempt to play out as normal. So
Yeah. Well, there are definitely some things that would be clues, like an FOMC day prior to 2 p.m. Eastern. That's going to be a chop day. And after 2 p.m. is probably going to be a trend day. So there are definitely things you can use that on, but just any old day, it's really tough to predict. I mean,
like you mean like any old day, just randomly out there in the clear blue sky?
yeah, without a scheduled news event or something like that. Yeah.
I see what you mean. I was thinking maybe I know when I see EMAs all clumped together,
Mm-hmm.
You look back and like, okay, well, we did in pre-market, we only did this range, and for the rest of the day, we ranged up,
Right.
up, down, up.
Right. I mean that is true, but the market can always change its mind and say, I'm going like gangbusters one direction or the other. So,
No doubt, and then
yeah.
and then there may be identifiers that are specifically signature to that type of trading day that are present or show themselves. Like, hey, he shows a card.
Yeah.
The system picks that up and then turns on and be like, okay, we were dormant because of X, Y, and Z this whole time, but now we've got the right signals or outliers. We're going to turn on and see what we can get.
But is that something you would want the system to do, or you want to be able to do that?
I would think a little bit of both. And maybe let's say it gives you the suggestion.
Yeah.
It gives you here's what I think, or based on and it would have to have some kind of historical. I guess I'm thinking if it could be back tested and it's correct some reasonable percentage of the time.
Yeah, you're looking for an edge. Yeah.
Yeah, it would be worth saying, okay, hey, But I think trend day versus chop day, that's not the biggest outlier. You're going to have more trend days than chop days. I think what you were saying about.
I think that's the other way around, though. You're going to have more chop days than trend days, I think.
Correct. Yes.
Yeah.
Statistically, you have less trend days
Yeah.
than chop days in a year.
Right. Oh, I'm sorry. I think what you were saying, Siraj, about having the percentage of contracts traded by a certain time, that may be something that would be an identifier to allude to, hey, it's not going to happen today, so turn it off before you trade too many contracts. You start over trading.
Yes.
That's actually a very interesting notion, because I have done some analysis about time in a trade being sort of an indicator, and so we could actually track your average time in a trade and say, if it's below this threshold, then just turn off this trade plan, something like that. Is that kind of what you're thinking, Siraj?
Yeah, I mean that's what the data has shown. Now, again, once you slice and dice, you'll always maybe probably figure out, because your exit strategy. That's why it's trading less contracts, because things are moving in the direction.
Yeah.
So your stops are not getting hit, so you can stay in the contracts for longer.
Right.
So net, you end up using less contracts per day. But that's just what I've noticed. Like I've noticed on days whenever I have losses, you will see significantly more contracts traded than your average. And I've seen this time and time again. So I'm just making, I'm making a fairly generalistic statement,
Yeah.
but it's based on what I've seen to date. Now, when you slice and dice it, is it because of some other nuance? I don't know, but it logically makes sense that if trades are working in your favor, you're not hitting your stops.
Yeah.
You're running, and the P&L is working in your favor till eventually that the trend fades out and kicks you out.
Right. Right.
I want to make the distinction, Shiraj. Are you saying that you're attributing some of that to the time inside any specific trade, or are you saying it, hey, based on like if we're 3 hours in, on average, I should only have been traded maybe 1,000 options at this point, and I'm at say 2,200. Call it quits. Is that the latter?
Correct. The latter. Exactly
Gotcha.
what you're saying. Right. So let's just start. Like we start at 9:30 Eastern, and by 10:30 Eastern, if you are showing a P&L, you should be able to see that the number of contracts you traded, and by tracking that, let's just say every day, by that time, 1 hour in, are you profitable or not profitable? And if you're not profitable, look at the number of contracts traded, and if that's not above your norm, just stop the whole day and don't try to hope to make up for it for the remaining 5-6 hours. Now I know that that's not, if everything was black and white and it was so easy, we'd all be rich. But I think there's something to be said on days when it's there's chop, and that chop doesn't get any better. It just continues for another 2 hours, 3 hours, and your P&L just keeps either going downside. And on top of that, now you are incrementing the number of contracts. So whatever fees that you're paying to trade here, even though they may be small, over the course of a week or month or whatever, it's going to add up. And you already know it's not working for you. So why monkey around with this anymore?
And then add the compound factor that after a certain period of time, you said the P&L starts dropping off anyway. It's even more obvious.
Correct.
Yeah.
To kind of your point and Lee's point, right? Typically, volume is strong till about 11 Eastern or 11:30, and then this the usual chop anyway that happens. So if you can get some headway earlier in the day, it's not to say that days we don't have like news, FOMC, treasury, auctions, whatever that comes out that can suddenly flip the day. But I'm just saying, in general, I think you kind of know when things are not going in your favor. Hoping it's going to turn around and make you back the money is, I think, not going to be very feasible, right? And I think what happens then is, what we always see is, after a couple of chop days, you'll get the trend day again. So you're kind of maintaining your capital through those sideways days for the ultimate day, right? Where you're going to make your money.
Yeah.
In a big way.
Right. Yeah. I think that what we talked about early on, where early in the day kind of sets the tone for the kind of day it's going to be. From what I've seen, that's really promising. That I think you really do have some ability to predict the rest of the day from the early portion, and so that may it may not be using the metric that you're talking about, but I think that there are ways that we can do that and know which days it's worth continuing and which days it's not.
Or at least
yeah. And Lee, I guess, if I want to put that on the wish list, is that we can see in the, besides the P&L and the realized and unrealized, is contracts traded, right? So we can see kind of the day goes by, Because right now I download it and then I try to do it in Excel and then quickly figure out what that is. But
Yeah.
that would be a cool thing, because I think most people, not I don't want to say everyone, but a lot of people are using options when they come to trade Unafraid, and
Yeah.
I think there is a correlation there, right? That at least I've noticed it, and
Yeah.
I think as more people use it, it's something I think they should look out for. Like, what's your typical spend? How many contracts do you usually trade? Let's say, like, an hour into the day.
Yeah.
And if you're above and you're not making money, stop it.
Would max trades not give you the same basic idea? I mean, because if you're in a trade that runs, then that trade will be the only trade. Or if you have 3 successful trades, max trades may be what you're really talking about. I'm just wondering if this would work for you as an interim solution.
I think that's definitive. I mean, because like you just said, you could be good and be up, and your max trades not be hit, and you may want to still continue to go with it because you're doing better than your average or on a typical day. And keep in mind, it's going to be that ratio. I think what we're leaning towards looking for is the ratio, because it's going to be different for each ticker. It's just an added piece of, say, side information that tells you, hey, looking at my dashboard and I'm good to continue because I'm not failing and continue to failing faster.
Yeah.
I'm still in green. So I think it being different for each ticker, and that could be a max trade to, once it's automated, you don't want it to continue doing 15, 20, 30 trades if you're already proven profitable and it's past certain time.
Right. Yeah, I mean, there's definitely
Right.
some stuff that's not included here that we're talking about, but I'm just wondering if right now what's available today would max trades get you what you're after, Suraj.
So I think, I mean, there's obviously a pro and con to the max trades. So for example, like on trending days, that trend could last 4 hours of the day out of the 6.5 hours of the day.
Mm-hmm.
And on those days, you definitely don't want to max out, because there will be, they'll always drop it, a couple of points to get people out of their trades, and then it picks back up and then it gets to run again.
Right.
So I think on trend days, and again, that's just my experience. I mean, trend days are when you really kind of kill it, right? It's your day to kill it in the market.
Right.
And so your chop days, I think, are just break even, small loss days. The normal, you can't avoid it. So I think you never want to limit the days that you're really going to get paid. So my only fear with putting something on a max trade is, would that, and again, it may not make a difference, and maybe that may be the option. Oh, but I don't know, right? I don't know if I had that on, would that limit me on a day when I would have made more money because of this, because it stopped me out.
Right. Right.
If you found over time over your trending days that your max trades on good solid trending days was, say, and I don't know the range, I'm just throwing out a number. Let's say it was your max trades on a good trending day for the past year was 25 trades. Then maybe you make your max trades 25 because you don't expect to go higher than what your best was, and so I don't think it's a bad thing to have max trades. I love that it's there. It caps you if you want to be more disciplined without having the responsibility of maybe holding on to that button yourself.
Yeah.
I don't know how easy it is to turn that on or off, and that's a different subject of needing it for a different reason. But I don't think it's a bad reason to have it there. But if you took your highest and you made your max trades, that or a little bit higher or a little bit lower, I think you'd be in the ballpark. But is that max trades there for your own self, for your protection, or is that for the automation?
No, that's automated. Yeah, all of these all of these will stop the repeating once they're exceeded.
No, I mean, is that there for the trade plan under the automated fashion? Like you've woken up and it's doing its own thing without you touching anything.
Yes.
There.
Yeah.
Okay, perfect. Then yes.
Yeah.
Then I personally think I would set mine at the a little bit lower than what my max on a perfectly good trending day would have been.
Yeah,
So
and that's a good point. I think kind of what if you look at it that way, like go back and look at your trade plan on a crappy day like a top day and see how many times did that execute in the first hour, and then do that repeatedly for the past, and then like to your point, you would get a baseline of probably certain things happen so many times before which, um, yeah, I mean, they definitely, yeah, I mean, I haven't done that, but again, I just noticed in general that the quickest clue I can get. Again, this is based on not, Lee has got a lot more data than I have, but just based on 3-4 months worth of data, at least to what I'm seeing is that's generally a good proxy, right? For because my plants, I keep plants which are like Lee, right? Different time frames, different, short, long, I'm doing everything, right? So it's kind of a hodgepodge of all kinds of things that, obviously on trend days, it works really well. And then days that are chopped, it's not to say it doesn't do, but it's not like every day is a bad day. It's just that you will not make that money, obviously, like a trend day. So my thing is, if I can limit the down days on those chop days, and know that quicker, then I just think it's to my advantage, right? To quickly turn this off or pause it, and just not mess around with the day, knowing that I already have some confirmation through my own data points, through the trade Unafraid.
already built in, and that way your trending days will obviously be able to run because they would use less trades, so you don't have to worry about reaching that threshold because you have room to go.
Correct. And the other flip side of this, equally important, which I think a lot of us don't do or maximize, is on trend days you should always try to maximize as much as you can pull out of the day. So like in this thing, Lee has, I think some of the trade plans, Lee, I think you can, how do you say, add to, I forgot where I saw that.
Yeah, the position tactics, add to winner. Yeah.
And I have not used that, but basically, to your point, where you identify there's a trend day, because you'll be able to see this again if you know contracts of 1 hour into the day. And the plus side is most trend days, when they occur, I mean, they will last through the end of the day. They don't fizzle out. I mean, they'll go through a pause consolidation still, but they still tend to continue throughout the end of the day. Is to use these kind of things. I don't use it. I'm just saying that I realize I'm just trying to get familiar with what it is I can do. But as you think, longer term, how, when these days don't come often and they do happen, what do you do?
Yeah.
Maybe if you don't want to mess around with this, add to winner, once your trade plan, executes for the first hour, you increment your position size, right? Again, I'm not.
You mean manually?
Yeah.
Yeah. You can definitely.
This is not trading or financial advice.
No.
Say,
Yeah.
Maybe do something like that, right? Increment it a little bit more because now you have a buffer because you've made some money,
Right.
and you can, increase the size.
Yeah. A couple of other things that I wanted to bring up about these trend days. There's a couple of setups that could actually help a lot with taking advantage of trend days. There's candle trigger and there's break candle type. So candle trigger, you'd be able to say anytime we break the prior 15-minute high, I want to get in. I want to, it's like a trend day will just keep breaking new or old highs, and a candle trigger is one way to do that. And then there's also, this one is not quite as reliable, but This allows you to, it'll look at prior candle colors, and this is more for reversal, so it's probably not relevant for. So, like for example, if you get red candles, then you can go, say, all right, the next time a red candle's high gets broken, I want to, it's kind of for mean reversion. But candle trigger might be a really good way to take advantage of trend days.
Are you able to show that? And this is based on a 1 minute chart with the filter being on the 15 minute chart.
You talking about this, or this?
Your outside strategy.
Oh yeah, my outside strategy is always 1 minute engulfing candles, and the one filter that I have been testing is the 15 minute. Yeah, but I mean, you can set it up however you want. You could put 37 minutes in here if you want.
Gotcha. Is there and you say engulfing, and what if it breaks above and below in the same candle? Is it the closing break?
Yeah. On candle pattern, and this all comes from Rob Smith's The Strat, which a lot of our users are familiar with the Strat. That's why it's kind of built in here. And I actually spoke to Rob, and he gave me permission. He said, as long as you mention that it's from the Strat. So, a 3 is an outside candle, but the only way it becomes an outside candle is by being a 2 first. So it has to break one side of the prior candle. That makes it a 2. And then it becomes a 3 when it breaks the second side. So it breaks the low, then it breaks the high, so you go long. Or if it breaks the high and then breaks the low, you go short.
So if it's an inside candle and the next candle just reaches the low of the previous candle, that's not an entry.
No, but you can add that. Like I could say, I want an inside candle followed by.
No, I'm just trying to.
2.
No, I'm not trying to add or change anything. Remember, I came into this and we were already on the 3rd floor, and I didn't understand what the foundation was.
Yeah. No, I understand. I'm just saying you can have multiple candle patterns, and it'll be looking for any of those. So
Right.
you could have a 1 and then a 3. And by the way, Dre, I don't think you've seen this, so I just wanted to show you that it tracks the candle patterns. It shows you what it's looking for, and this is the filter. So you can see that right now it has a 5-minute full time frame continuity filter, and right now it's green. So if it turns red, then this would be red. So right now it would only allow a long entry, and if it were red, it would only allow a short entry.
And this is the filter on this one is the 5-minute.
Yes. Yeah.
Okay.
But you can actually change it in real time.
Okay, so now that you mentioned that, that's part of my trading strategy on TradingView. I have 5 different tickers, and I get a signal on the one that I'm looking for on SPY, or say something else. If all 5 of those on a higher time frame are the same at the same time.
Right.
Okay.
Yeah. So I mean, you can basically do the same thing here, although at this point we don't support cross symbol indicators. So it's definitely on the roadmap that, like I'd like to be able to watch the SPY or the ES and have that drive whether an entry in some other symbol is allowed, but not yet.
Okay. I'd like to fully explore this, but like I think the first step for me understanding that is to be able to see the isolated data on 1 or 2 trade plans to be able to compare them together.
Yeah.
But I mean, which one did you mention that you had one that was ready or practically ready for adding real money to and unleashing?
Yeah, that's definitely SPY using these follow symbols. I mean, let's see, if we look at the heat map, these, I have a lot of confidence in these SPY trade plans. They They have proven to be very consistent, especially from the open till 11 a.m. Eastern. I just
That's the outside.
yeah, yeah. And again, it's the trade plan that I really have faith in. My stupid outside candle entry is you could probably do far better if you had something with more edge than that. But it seems like during the early hours of the market, that is a decent indicator of you'll get some follow through apparently on that. I wouldn't trust it during lunch. During lunch you get tiny little candles and it's easy to get an outside candle that is meaningless.
What are you aiming for on this? If let's say it was up until 11 o'clock Eastern, and you were pushing this out, and SPY trades around at the money between $200 to $500 a contract or so.
Yeah.
What would be a successful day? Either P&L, number of trades. What does that look like for you?
Honestly, that is not an answer that I have readily available because I've been so focused on developing the product, marketing the product, and gathering the data that I almost don't think about my own trading systems. It's very unfortunate, but it's like you guys are much more in tune with using the product as a user than I've been able to be. So I'd actually ask you that kind of question or Siraj that kind of question because unfortunately I don't have the time to focus on that right now. So
okay. I could answer it for me,
yeah.
but in order to even maybe trust the template, if you will, I would need to understand it backwards and forwards.
Yeah.
And then, hey, here's the amount of money I'm willing to risk at these historical numbers. Because
Yeah.
it's not guaranteed or proven in the future, but for all intents and purposes, it was successful with this strategy. We're still in the same type of market now. Let's give it a shot.
Right.
And hey, on a daily basis, I'm willing to lose this amount of money and still move forward and still be able to trade the next day. I have X number of days before I am at a max loss or max pain myself. So I'll give it this time frame, given the fact that it says, you have so many winning days and drawdown, so many losing days. So
right. Well, here I don't mean to interrupt. I just wanted to show you I do have some data here that we can talk real dollars. So like here's one that it's the scalp outside version 8. We can look at what it actually contains, but it's traded 5,800 times. The average winner is 127. The average loser is 86. So it has a 45% win rate. So those are some real numbers.
What is the difference between a version 8 outside and a version 5 outside versus filter?
We'd have to actually look at the trade plans to give you a real answer. Here's and I don't mind doing that. I'm just saying I'd have to go to a different screen. But like here's the follow the primary one that started everything. And so here 282 and a loser of 175. Win rate is only 41%. So I mean we can go look at the details if you're interested. And I'll share these trade plans with you.
I mean, I'm just thinking, and like I said, I'm still fairly new, but this would be my thought process to go through and go down the line and say, hey, I'm confident enough to put my money behind this because
Yeah.
starting from, I can see each one of them. But I'd really be interested in knowing if you flip IWM.
Yeah. The unfortunate thing about that is the Trade Unafraid doesn't actually let you do that today. It's not built in to take the inverse of the setup. So
you couldn't tell it to say, hey, if this is this and this is this, take a put.
No, because it's going to interpret the setup as bullish. I'd have to create a new setup or some flag to say, you know, trade the opposite. So yeah, unfortunately that just wasn't a thought when we were building this stuff.
Theoretically, if it were,
Yeah.
IWM would probably be doing better than Spot.
Yeah, you're right. I mean, the losses are far greater than the wins. So yeah. So I'm making a note of this.
You might be onto something there.
Yeah. So yeah, I actually like that idea. If you find something that has edge, whether it's positive or negative, you know, you might as well use it. The problem though is it may just be a poorly constructed trade plan, which I think is what that Sankey diagram was telling us, is that the reason it's losing so consistently is because the ATR trail is so tight. And I don't think there's a way. I mean, maybe you could put a target. What's that?
If it's doing something consistently, the consistency is the good piece.
Yeah, that's true, but you may not get follow through. Like what I'm saying is, if you want to scalp and put your take a profit on a put where it tells you to go long, you put that profit at the ATR trail. You're right. You may get a really good result, but I don't know if you can count on a full trade plan getting a lot of follow through that way. So we may have just been scooping up losses by having too tight of a stop, and so it may not be as advantaged in general as what you're thinking. I don't know.
And you don't have a way of you don't have. And I'm not saying it. I'm asking, do you have a way of, I guess, tweaking or adjusting the proverbial stop to see what differences it would have made?
Oh, you mean like what if it had been? No, see, to do that, we have to then pull in actual stock charts and recalculate, you know, what would have happened versus what actually happened. That, I mean, I've actually started to do that. I have stock chart retrieval down here, and I've thought, but that's like a whole project. So and I don't know that we can do it accurately because getting charts doesn't tell you anything about quotes and it doesn't tell you anything about options. It will only tell you these are the trades that occurred, and you don't even know exactly the order they occurred. Like if you get a 1 minute candle, you still have to guess in what order that candle was constructed. So it's always going to be a compromise. Well, I'm sorry, what?
Oh, you said you wouldn't know because of you wouldn't be able to tell based on the high and close because you don't know which occurred.
Yeah, I mean, well, you can guess based on open and close, whether the high was hit first or the low was hit first, but you really don't know all the details of how it played out, and you don't know what the quotes were. You only know what traded, and you don't know the option quotes either. I mean, you got to pay a lot of money to get historical option quotes, and even then, as with stock, you're only getting the trades. You're not getting the quotes, and I can show you tons of videos of option quotes going crazy, and that's actually one of the big concerns with trading options versus trading shares is, you know, the quotes. Sometimes the spreads get wide and narrow, and you know you can get stopped out of something that really was fine.
It gets unpredictable and it gets undependable because of the Greeks and the spreads.
Yeah. So, you know, I honestly believe that if people traded shares, if they had the money to trade shares that were more, where you could have substantial gains, you'd do so much better than with options. The problem is that options make it accessible for people who don't have, you know, hundreds of thousands of dollars to swing, but shares just the the spreads are so much more consistent and reliable than with options. So it's really a disadvantage to trade options. But that's what we're left with.
I'll tell you a little bit of the story. I got fascinated with bots and this type of programming stuff when there's a program called 3 Commas. Have you ever heard of that?
Yeah, for crypto.
Right.
Yeah.
And I think in 2 months I made 70,000. No, I'm sorry. In 2 months I made $7,000 not doing a single thing other than just having the bots on and running. I think I had 40 bots on about maybe $50,000.
Wow.
And I made $7,000 in 2 months.
Yeah. But you can also lose it that fast, right? I mean, if the bot's well constructed, you probably won't. But crypto is very volatile. Like it puts options look stable compared to crypto.
They went down over time after about 2022, 2021.
Yeah.
The point I was thinking about was the fact that like the grid bots, it's making these little on stocks, if you will, not options. But if they're running on, say, a strategy that is taking multiple trades and they keep picking up little cents here and there over time, they just keep grabbing.
Yeah.
Bite size over each hour, and it starts adding up.
I will tell you a little secret that Trade Unafraid, the name Trade Unafraid actually came from. I was before I even knew the term grid bots. I was doing that, and I actually implemented some of this stuff. In fact, hidden in the Trade Unafraid software is some grid bot stuff. So that it's still something that I haven't quite let go of. But yeah, that whole thing is very familiar to me.
Okay.
Yeah. So we've been going for almost 2 hours. Are you guys? I mean, I'm fine if you want to keep talking. This is great. But if you're feeling like, well, I'd like to get on with my day, I understand.
I mean, if you had anything else specific to cover or go over.
I mean, there's always more. There's so much, But I think we covered what I had in mind for today. I mean, I really. Oh, here's one other quick thing. I'll show you that this is newly added into the export. So there's only data for like the last week or so, I think. But if you're familiar with MFE and MAE, that's maximum favorable excursion and maximum adverse excursion. So this shows you versus your actual P&L how far the price went with you or against you. So you can see the realized P&L and you can see how much you left on the table, basically. So this is one thing this does is it shows you how efficient your trade plan is at, stopping a trade soon enough to capture a good chunk of the gains. So like you can see that, a pretty substantial amount was left on the table here, $300 or so. You'll find that stops are not nearly as good usually because typically you hit your stop loss at the max, so you're going to see mostly the stops are at the end of the red line unless you benefit some from worked orders or slippage. I don't think we've talked about worked orders, Dre. Suraj, you may already be familiar, but I use worked orders all the time in my live trading.
Is this based on trade plan or is this based on, what is this based on?
Well, each of these lines is a trade. So a trade had an MFE and an MAE and a realized P&L. So that's what each of these. The green dot is the realized P&L, and then the blue line is the MFE, and the red line is the MAE.
Okay, but this has nothing to do with the MFE within a trade plan, right? This is just evaluating each plan based on how
Oh.
much could have.
Yeah, right. Sorry. It's reuse of the term MFE, but it has nothing to do with the MFE retracement tactic. Yeah,
Okay.
they're unrelated. Although you would hope that the MFE retracement would perform, according to spec and capture that percentage of the MFE. Um, but most of these trade plans were using other exit tactics, so you would expect them to do better than the MFE retracement because they should capture more of that gain and stop out before the MFE retracement. So,
So this is saying, like, for example, I entered a trade, it went from 0 to 200, and then I exited at 150. So it's showing 200 was the max you could have made,
right,
even though you got it 150.
right.
Got it.
Yeah.
That's
So,
cool.
that gives you some insight into how effective your stops are. But, the flip side of a stop is, well, maybe you kept going and you missed out on a bigger gain. So, but, I'm just trying to provide as much possible information as I can. This obviously needs some work, but this is another way of viewing the same thing where I was trying to look at percentages. So this is 100% of your loss, or this is the MAE and this is the MFE, and I was trying to find some way to. Right now, I don't think this visualization is doing anything for anybody, but it also includes the zero that is, between the MFE and the MAE, you have zero, and then there's the where you ended up getting out. So this I think you can ignore for now, but I was trying to do something more percentage based rather than just dollar based up here.
And then what about this chat GPT analysis? Is that something new?
Yeah, it's actually, I actually played with it a while ago, and the API has changed since then. See, I was working with it back when 3.5 Turbo was the latest thing, and so you can give it your data frame, and say, you could actually say, here's what I want to know, and we'll see if it can actually pull anything useful out. This is broken now because the API's changed, so I need to do some work to get it working. But anyway, I'm also hoping that we'll have some users who are proficient in Python and Plotly or any other visualization library, and maybe I can get some help. People can contribute their own ideas, because this is a wide open field. I mean, there's so much information in our data frame about the trade plan configuration, the tactics that are used, and how each thing played out, that there's just a ton of information that we can pull out.
So well, if you attach the API, I'm fascinated with this kind of stuff, but Python and code writing and getting it to output the information I'm asking for, unless it's just in layman's terms.
Yeah.
It's I will admit, but you could put this data set information into Chat GPT, and maybe one at a time, because I think you got 11 tickers there. But you could ask for it, say, of the 8 different versions, which one was more promising or more profitable, and what time range array was it, and then maybe even ask it, if on the ones that it was either most profitable or least profitable, which version, what identifiers were present when it was least profitable, and
Right.
what anomalies were also present when it was most profitable, and take those edges and keep baking it into maybe other trade strategies.
Right. And actually, as you're talking about this, I'm thinking machine learning would probably be even better than ChatGPT, because I mean, I find ChatGPT to be very hit or miss, and it may or may not pick up on this, but in that data frame, I'm not sure. Oh, I guess I just haven't run anything in a while. I don't know. In that data frame, there's tons of actual variables that could be inserted into a machine learning tool as features, and so it would probably do better than ChatGPT. You could literally find, here's like 150 columns of data about the trade plan, about the orders, and you could find correlations that would give you insights. I mean, that's basically what everything in this notebook does. But with machine learning, you wouldn't have to necessarily ask it. It would just it would reveal the things that do correlate to P&L. And so, it would be easy to find like this particular configuration in a trade plan has this advantage versus another one that doesn't. So, you could just continue to enhance that.
Would he give it to you in code or in?
No, it would be in data that you could plot in various ways. So, machine learning basically just gives you tons of numbers, and then you'd have to find a way to visualize what those numbers are. So it's all math based. It's all linear algebra, but it can handle massive numbers of inputs and find correlations in the outputs, and that's basically what we have here. That's the problem we're trying to solve. So yeah, I may. That's a project. So, but I may dig into that because I think it may be better than trying to figure out new ways to visualize. I think it would just find them. So that may be the next thing to do. And that's really what's underlying GPTs anyway. Is it's really a form of machine learning under the covers anyway. It's just language based, and so it doesn't even do the math as well necessarily as machine learning does. So the more I talk about it, the more I'm thinking machine learning is the next way to go.
So Lee, is that the data from the data dump? Is that what you're saying?
Yeah. It would take all the exported data that Trade Unafraid gives you, and it would just you just define all these. They're called features in machine learning. You just define all these different things, and they're all right now columns in the data frame, and you just feed it all of that and let it crunch it and find what things in the inputs correlate to the outputs that you're after. And then you may find that the filter, 5-minute filter is the thing. I don't know. The one thing that it won't be able to do is the what ifs. So that's why gathering all this data is so important, because gathering the data is the only substitute for asking what if questions. That it's like, what if the filter was 6 minutes instead of 5? Would that help? You really can't. You can't say with certainty whether it would or not without actually running tests. So that's the unfortunate thing, is forward testing is really the only way to go with this. So that's why it always pays to run tests, even if you don't know if you're going to use them. It's like, at least you have data that you can put to use. Anything else, or have we run out of things to talk about?
Yeah, I'm good.
Yeah. What were you saying, Dre?
I think I'm tapped out.
Yeah.
The only other stuff is maybe offline for you, but
Yeah.
This is very informative, and I appreciate you spending the time in it.
No, it's my pleasure. I love talking about this. It's like, I could do this all day. It's just, we there are other things that we drill down on as they come up, but yeah, I feel like we've exhausted today. All right, well, thank you guys. It's this wouldn't have been the same without the two of you here. So thank you.
you're welcome.
Yeah. All right. So I'll schedule another one for like a month from now. Okay.
Sounds good.
Yeah. All right. Great. Thank you guys. Enjoy your long weekend or what's left of it.
Yes, sir.
All right.
You too.
All right. Take care.